Good morning, everybody, and welcome to the AleaSoft webinar. This is edition number 57. My name is Rio Salto. I'm an associate partner at AleaSoft. And today we don't have Alejandro among us. Alejandro is enjoying his deserved holidays. But today we have Francisco on the backstage, making sure that everything is working properly. So in this edition of the webinar, as always, we will make a review on how the energy markets has evolved in the previous weeks. We will be seeing how they compared with what we saw in our last webinar. It was 4 weeks ago, and then in the second part we will talk about energy storage mainly. We have interesting things to see how the technology is evolving and how they are impacting on the energy markets. So, and as always, if you have questions, you can leave them in the Q&A sections. Afterwards, I think we will have time to answer most of the questions. So, let's start. I will share my slides. And as always, I will start with a few words about AleaSoft, about the company, in case you don't know us and our services. In AleaSoft, we are energy market advisors. We have more than 25 years of experience. We cover all the energy markets in Europe. We also cover some energy markets in North America, South America, in the Middle East. And we have data, and we are ready to provide forecast for basically any market at the global level. Our goal is to cover all the energy markets at the global level. For forecasting, we use our own technology, a technology developed by ourselves, specifically for making forecasts in the energy sector. The three main points that we always like to stress about our methodology, it's that it is a completely scientifically based methodology. It's a hybrid model that combines techniques from the statistical classics, so regression, econometrics, time series analysis, all of it combined with more advanced techniques of the artificial intelligence. We use recurrent neural networks and machine learning algorithms. This hybridization of different models, we can take advantage of the strong points of each of the technologies participating in the forecasting model, and this gives us very robust, consistent, coherent results, forecasts that keep the coherency among time. This is one of the aspects that our clients like the most about our forecast. And with some of our clients, we have had a relation of more than 25 years. We still have some of the clients that we had when the company started. And well, this is the technology that we have been using for more than 25 years now. We started in the Iberian electricity market, and now covering most of or all of the markets at the European level and some markets at the global level. During these 26 years, we have been developing and expanding our range of services, basically covering the needs of our clients as the energy sector evolved, the needs of our clients also evolved. So we basically kept introducing new services for our clients, and at some point we decided to divide all our services under 6 divisions. In this way, it's easier for us to explain our services because, as I said, it's a very wide range of services, so sometimes it's difficult to explain what we can do. So under Alea Green, we provide all the services related to the long-term forecasting. We are talking about forecasting energy prices, demand, temperatures, production of technologies, fuel prices at the long term. This means up to 3 decades. And we can provide hourly price simulations up to 30 years in the horizon. Under Alea Blue is where we offer our short and mid-term services. This means forecasting for the day ahead or for the hours ahead, up to 10 days ahead. And for usually interesting for trading, for instance, or if you are operating a power plant, or if you are a retailer company selling electricity to your clients, this is useful for the daily operations. Under the midterm, we are talking about 2, 3, 4 years into the horizon. This is useful for planning, for preparing hedging, for instance, in the futures market, everything related to the midterm planning. Under Alea Storage, we provide all the services related with batteries mainly, but also for pump hydro stations. So anything related to energy storage, we provide revenue stream forecasting at the long term, so financial models for battery energy storage systems. So if you are planning to install a standalone battery or to put a battery in existing PV plant or wind farm, we can provide revenues forecasting at the long term. Under Alea Hub, we have a couple of marketplaces for PPA. So if you are a developer looking for an off-taker, or if you are a consumer looking for a project to provide you electricity, we have among our clients, we can provide this kind of marketplaces. Under Alea White, we basically provide information about the energy sector. We regularly publish news on our website about reviewing the energy markets and news pieces about hot topics in the energy sector. We make these webinars each month, so everything related to sharing information about the energy sector. And under Alea Consulting, basically any decision that you need to make, anything you need about related with the energy markets, we can help you make the proper decision, providing you all the needed information about the present and also about the future. With this wide range of services, we basically cover any needs of any of the players in the energy sector, being you a developer, a producer, or a consumer, a retailer, if you are an operator of transport grids or distribution grids, if you are a trader, an investment funds, lending partners. Basically, I think we can cover any needs for any of the players in the energy sector. Okay, let's start with a review of the energy market. As always, we start with oil prices. These are the oil prices for the Brent oil, and basically, as you see, there's been a lot of movements lately. But the interesting thing is that you can basically follow the news just looking at the oil prices. So in our last webinar, it was mid-June, we were basically quite quite stable around the $65 per barrel. So everything was looking smooth. Then the conflict between Israel and Iran started. So this basically put fears on the supply. Basically, the supply from Iran, the fear that the oil that goes through the Strait of Hormuz could be somehow interrupted or delayed or disrupted. This basically pushed prices quite high. And then when the first ceasefire took place, then prices dropped basically close to the level that they were before. So basically, as you can see, you can follow the news just looking at the oil prices. After that, recently, OPEC Plus countries announced another increase in production, higher than expected. So, but instead, that would basically mean an increase in supply. So you could think that this would put downwards pressure on prices. But as this was more or less expected, and even if there have been an announced in increasing production. Most of the countries were already putting more oil than they were allowed to. So basically, the real increase in production, it's not going to be as much as they announced. So basically, the market is not very, I would say, very worried about that. So prices are still in this above this $65 per barrel level. About the future, most of the most of the analysts see prices right now being slightly higher than expected. So most of the analysis put the analysts put the expected prices more around the 65 than the $70. So we will see. There's so the downside risk would be prices going down at the most down to $60. There is some upside risk if you take into account that the inventories need to be replenished during the summer, but mm, most of the analysts say that there is really no such an upside risk. So basically, obviously, it will depend on how the events developed at the global level and all the conflicts that we have now in place. But basically, if everything goes smooth and we don't have new news on on these conflicts, prices will stay around this 65. This is what we expect the prices to be in this level of the $65 per barrel. If we move to gas, these are the gas storage levels in the European Union. As you remember, we finished last year quite low, close to 30% of the reserve. Now we are replenishing, refilling the storages in order to be ready for the next winter. Right now they are at 61%, much lower than where we were last year, this time last year, we were at 79. But even, I mean, the rate is quite stable. We are refilling it in a more or less expected rate. And we probably, there's quite a high probability of reaching the target that it has been flexibilized a little bit. Before they were 90% by the 1st of November. Now it has been lowered to 85% in order not to stress too much the market. So, and when we see the gas prices, we will see that it looks like there is not much worrying in refilling the storage really fast. So it looks that everything is quiet and working more or less as expected with no rush. So this is important because this if not we could stress the market. So replenishing it looks that we will reach the expected levels, but probably we will not reach the 90%. But even though if we are above the 80%, it looks that it will be enough to face the next winter. And this week we saw this news that the largest storage facility in Germany is basically empty. It's around 2%, I think. So really, it looks that there is no much incentive on filling gas storage for the next winter. Basically, this can be due to several factors. One is that, as we will see when we look at the gas futures, there is really a very small spread between the prices now and the prices for the next winter. So if prices are not expected, or futures are not right now, futures are not much higher for the winter, then there is really no incentive in filling in buying now the gas to use it in the winter. So this is one of the factors. and then that usually, at least in Germany, most of the gas storage was filled using long-term contracts with Russian companies that right now we are not using anymore Russian gas, so or most of it. So basically, there is these long-term contracts are not in place. So that's why if there is really not a price incentive in filling the storage, then as I said, we are refilling it, but the not we are not rushing to do it, which is quite interesting. It is dangerous if the winter is really cold, because then we will not have enough gas in order not to stress the market. But but as we don't have much incentive, we are not stressing the market, which is also interesting. So these are the gas prices, and as in the case of the oil prices, you can also follow the news just looking at the price series. So basically, you can see how the prices increased during when in the peak of the conflict between Israel and Iran, and then with the ceasefire was agreed, prices went down to the previous level. So basically, the fear again was if the Strait of Hormuz was completely closed, then the supply of LNG at the global level could be highly disrupted. So there was a real fear, and that pushed the prices up. But when the ceasefire was reached, the drop was quite sharp. So so that's an interesting fact, because if we look at the daily returns, these are the daily returns since the beginning of 2024, and you can see that when the ceasefire was announced, the price dropped, and it was the largest drop since August 2023. So it's beyond the range of this graph. Okay, so basically in the future, again, we are basically exposed to any shock at the global level. If not, the expectations are that prices will be around these 35 euros megawatt hour. But depending on how the reserve levels are evolving, maybe by the end of the summer, maybe in autumn, we will realize that we will need more gas to begin to have the expected levels of reserve at the beginning of the winter. So maybe then there will be a rush to end up refilling the storages, so that could put upwards pressure. So there's an upside risk. There's an upside risk, mainly depending on how the reserve levels are increasing, and obviously we are always exposed to any geopolitical global event. The CO2 market, it's the most boring one in this occasion, because basically we have some volatility, but no major changes have been observed. Prices around 70 and 75 euros per ton. The market has not been very responsive to the Middle East tensions. So basically, at the short term, at the midterm, prices are expected to be around this 75 euros per ton of CO2. Okay, now let's look at the electricity markets, and we always take this opportunity to show you our online database. This is one of the services that we provide to our clients. It's a very convenient way to have all the information that you need in one place, always updated, always in the same format, ready to be analyzed. It's very useful if you are a trader, if you are an analyst, if you are a CEO, if you are a CFO. So information is power. In the energy sector, I would say this is even more important. So let me share the online database. And here, and basically we provide data, time series, variables, everything related with the energy market, basically for any market that you will need. We are adding new markets every day, so most of the variables are grouped in depending on the country, depending on the market. We have also fuels data, macroeconomic data, futures markets, and then even if you need your own observatory, we call them observatories, even if you need your own observatories with a given set of variables, we can build it for you. So it's very flexible in this sense. Here, what we are seeing are the monthly average prices for some of the most important electricity markets in Europe. So the last full month that we have is June, compared to the last full month that we saw in our last webinar, that was May. As you can see, most of the markets stayed more or less at the same level. Changes between -5% plus 7%, so quite steady. But there are three markets that really increased these prices. So prices in Spain increased more than 300%. They were very low, so the increase is important, but because we were at very low levels. Prices in France increased more than 100%. In May, Spanish prices were the lowest one. Now the French market is again, as it was at the beginning of the year, it's again the market with the lowest prices. Italian prices are still the highest one. Prices in Italy increased by 20%. So this change, this increase in prices is mainly related to the increase in demand, and that it is related with the increase in temperatures. So demand in Spain increased by 11%, in Germany 4%, and Italy 7%. Very correlated with the increase in prices, because in the rest of the countries where the prices didn't change much, the demand in most of them even decreased a little bit. So an increase in prices quite related with the increase in demand, related with the increase in temperatures. If we make a zoom in the last weeks, those are the daily average prices since the beginning of May. And basically here you can see how most of the markets stayed more or less at the same level. Italy in green here at the very top. And then you can see how France and Spain, that are the blue and red here at the very bottom, that they were very low during May. Now in June they start increasing, and they are now more or less at the same level. We can see interestingly here how for some days prices, we had a peak of prices. This was correlated with the heat wave that was hitting most of Europe, that obviously produced an increase in demand. Also, some power production facilities like nuclear power plants and gas power plants, some of them were shut down, or at least restricted production, because they were unable to cool enough their facilities. Most of power plants use cooling system using water from rivers or from the sea, depending on where they are located. If the temperature of the river is too high, then they are not able to operate, because they won't be able to cool properly the facility. So in France and in Switzerland, at least, in one nuclear power plant in each country was unable to produce at least 100% of their capacity. If we make a zoom, those are hourly prices since the beginning of June, and you can see how during this after the 1st and the 2nd of July, we had prices for some countries above 500 euros megawatt. Again, related with this heat wave and this restriction on production in some power plants. Now, more things that we can see. It's interesting to see. It's something that we show since the spring, because because mainly solar PV plants were kind of worried of the very low prices during solar hours that we had during the spring. So here you can see the hourly prices for the Spanish electricity market since the beginning of March, and it's interesting to see all this range. So since March until now, until today, because we can see the different configurations of prices, the different typical prices that we can see for different seasons, at least in the countries in the southern part of the European continent. So at the beginning of March, we had prices typically from the winter, so very high prices most of the time, higher prices above 150 euros, lower prices around 75 euros megawatt hour. Then when the temperatures decreased, so we entered in the spring, where we had basically very low, even zero or even negative prices, mainly during solar hours, and this lasted until the beginning of June. So here, as you can expect, captured prices by the solar PV were very low. We will take a look afterwards at the captured prices. And then at the beginning of June, the peak prices started increasing, and now after mid-June, more or less, we are more in would say typical summer prices, with very high prices in the peak hours, and then during solar hours, prices are usually higher than depending on the demand, depending on if we have a festivity, if we have a weekend, then they can go back to zero, back to very low prices. But most of the time they stay at quite high levels, around 70, 80 euros megawatt hour. So captured prices for PV raise up again during the summer. So this is interesting because you can see the three basic types of prices that we have in different seasons. If we compare this very same period with what we saw last year, you can see that it's quite similar. Here it's in 2024, it's since February, because very low prices started early last year, basically due to weather conditions. And again, we can see winter prices with very high peaks, and the lowest prices being around 20, 30, 40 euros megawatt hour. Then we suddenly started this spring configuration of prices with very low prices most of the time, and basically all of the solar hours. And then starting on June, we went to these typical summer prices with much higher prices during solar hours, and then some of the days going back to zero or to very low prices. So again, as you can see, more or less each year we are repeating more or less the same pattern. Okay. Another thing that we were talking about was this increase in demand due to the temperature, due to the increase in temperature. This is the hourly electricity demand in Spain since the beginning of June, and you can see how it kept rising until the first, second, and third of July. This was the top of the heat wave, and then it decreased. If we compare it with the temperatures, you can see that more or less they are following the same path. So we had the highest temperatures just at the end of July, at the end of June, and then we had the highest demand just afterwards. But we can also directly compare them because to make it easy to see the correlation. So here we have the demand daily demand in blue and daily temperatures in red. And you can see how basically how highly correlated they are. So when temperatures increase, also the demand increase. This is the usual behavior during the summer. We can, if we look it since during the winter, we can go back to the 1st of January, and you can see that if here the correlation it's very clear. So more temperature, more demand. We can see how in the winter it's basically the opposite. So when we had the lowest temperatures, we had the highest demand, basically, and then we have this range of temperatures between around 15, 20 degrees, where the demand is basically insensitive to the temperature. So this is the behavior, the usual behavior of demand versus temperature. So in the winter, they are anti-correlated. During the summer, they are directly correlated. Some of the interesting things and analysis that you can do, just basically comparing variables in this online database. Another interesting things that we've been hearing about is how the nuclear power in France is recovering. So this is the monthly nuclear production in France since 2007, and you can see how in recent years we remember a lot of news about problems in nuclear power plants, how they stopped due to technical problems, due to deficiencies that they were found, and they reached the minimum in 2022. So this was just in the peak of the gas prices. So also another contribution to very high prices that we saw, in gas and electricity during that period. And but what we are seeing now is the recovery. So and this is one of the factors that is impacting futures prices. So we will see when we look at the futures how the French power futures are much lower for the following years than the German, for instance. Most of the time they were quite similar. Now they are quite different because one of the factors, so the nuclear French power is clearly recovering. So most things that we can see, we can compare the wind power production. This is the monthly wind power production since 2015 for several markets in Europe. And we can see how Germany is the king in the wind power. But we can see how it's evolving. If we make it, this is the monthly average, we can make the yearly average to clearly see how in most of the countries in Europe, wind power is increasing. But if we look at the solar power, we see how this increase is even more exponential. Again, Germany is the king in solar power, and it's been increasing a lot during the recent years. But the Iberian market, it's this one in yellow, in orange, is the one that has been increasing more exponentially. You can see how it's been increasing a lot during the last years, starting in 2020. It's been stagnating for over a decade, and since 2020, it's been increasing exponentially. Okay, and some of the recent observatories that we have been including are the ancillary services. In this case, for Spain, we have the secondary reserve, the tertiary reserve. Basically, because they are interesting, they are regaining interest because since solar photovoltaics plants are already playing a lot in these ancillary services since several months, several years now. They are playing an active role in the ancillary services, though. So the active management of solar power plants is something that it's been increasing in recent years. Before they were kind of passive, just receiving the price that the daily market was giving them. But in the last month, in the last years, they have been playing a more and more active role in the ancillary services. Also for batteries, because one of the revenue streams for batteries will be the participation in the ancillary services and the different markets. Because battery, it's the ideal technology to play in these markets. It's very flexible. They can respond quickly to increasing or decreasing, increasing production, reducing production, increasing consumption. So they are very flexible. So ancillary services markets are gaining interest because, as I said, they will be one of the important revenues for the batteries in the near future. And here you can see we have a reserve up for the secondary, reserve down, reserve up prices, requirements of reserve, allocation of reserve, also from the tertiary reserve. And we can do comparisons like this one. This is the up and down prices for the secondary reserve. Down prices are lower than upper prices, basically because in order to provide upwards reserve, you need a technology that is able to increase production. So here we have basically hydro and basically gas power plants. While to decrease production, basically any technology can do that. We have a lot of participation, as I said, of the solar PV and the wind farms in the downward reserve. That's why, with more competition, obviously there are lower prices. Okay, and this is basically, as I said, we are including new information every year, and everything that you need, we can easily accommodate it into this online database. Now, going back to the slides, as I mentioned, let's take a look at how the zero and negative prices are evolving. So those are the number of hours with zero or negative prices for each year until July 10th. So for each year from the 1st of January until July the 10th, how many hours with zero or negative prices. This is so here we are able to compare how we are doing in 2025 compared to the same date in recent years. For Spain, we are having right now less hours that we were having in 2024, similar on what we are seeing in UK. In Italy, they are having more hours with negative prices, although they are very few, so it's easy to overpass previous years. And the countries that are really having more negative prices are France and Germany. We will see how we end up the year, but it looks like they will end up with more negative hours than the previous years. While in Spain, it looks that we will be more or less at the same level. We will see what happens in autumn. Basically, number of negative hours, it's important because they plays an important role in PPAs, because PPAs usually have clauses related on what to do in the case of when there are zero or negative prices in the daily market. So forecasting the number of hours with zero negative prices it is very important in order if you are in a PPA negotiation, for instance. And this is one of the specific services that we provide, forecasting the number of hours each year with zero negative prices at the long term. So as I said, very important for PPA negotiations, for instance. Captured prices. Those are the monthly captured prices for solar PV in Spain compared to the two previous years. And you can see how we had a much lower month of May compared to the rest of the years. But right now, we are back in the track of last year. So as we saw, we are already in typical prices from summer. So even though our prices during solar hours are much lower than the average market prices, the prices are much higher. So even though the capture rate could be low, the capture prices are quite high. So year to date, we are above or nearly 35 euros megawatt hour. Last year, we were more or less at the same level. So as I said, we are back on the track on we were last year. We will see how the autumn develops. This is going to be the key to know at the end the average capture price for the whole year. For wind, we are basically much better than we were last year because during the winter we had, during the spring we had much higher prices, even though in May they were lower. So year to date, close to 60 euros megawatt hour. Last year we were just at 32 euros megawatt hour. So for the winter, for the wind, we are much better than last year. Okay, now let's take a look at the futures market. So what they are saying about the energy that it's being traded today and delivered into the future. This is the forward curve for the oil futures compared to the curve that we saw in our last webinar. Basically, as the spot prices have been fluctuating a lot and market agents see some more upside risk after the recent events, there's been an increase in the futures in the whole curve. So 5% more for the rest of 2025, close to 3% more for 2026, and more or less an average of 2% upwards for the long term. So basically, a perceived more upside risk for oil. For gas, the zoom out, the large picture is that prices haven't changed much, although prices have decreased for the summer and also for the winter. So this small difference between the prices now and the prices for the winter is one of the lack of incentives for storing more gas right now, because if prices in winter are going to be as high as they are now, then there is not a lot of incentive in order to buy gas now in order to supply it during the winter. So basically, this is one of the reasons why the refilling of the gas storage is not rushing. So this is good in the sense that it's not putting pressure on the gas prices, but it could be a problem if we are facing a very cold winter, for instance, because then we won't have enough reserve and we will need to import a lot of energy that would put pressure on LNG prices, and LNG prices can be quite high because they are at the global level. So if the demand in Asia, for instance, is increasing, then we'll have to pay a premium in order to get those cargoes to Europe. And CO2 futures, basically, as the spot prices have decreased a little bit, the forward curve is usually very rigid, so a global decrease of 3.2%. Okay, and the curves for the electricity futures with very small changes, slightly increases, not for Cal 26, but yes, for the following month, basically responding at the changes that we have seen in gas futures. And as I mentioned, you can see how at the long-term futures for France and Germany are basically the same, but at the short term they are very, very different. And one of the factors here is the increase in the nuclear in the French nuclear production, that it's being steady for the recent months, and it looks quite promising for the next month. And this is putting downwards pressure on the futures for France compared to Germany, where they basically need to import energy. Okay, and in order to summarize what we have been seeing, what are the key elements that we are taking into account when forecasting prices right now? Okay, for Brent oils, we saw how they have dropped sharply after the increase due to the Middle East tensions, and how they dropped sharply when the ceasefire was reached. Even the OPEC plus increases are announced. It doesn't look like they are putting a lot of pressure on prices, so we expect prices to keep more or less at the $65 per barrel level, although we are always exposed to any geopolitical event or shock that we can see that can make a huge disruption on the supply side. Gas prices also spiked during the Middle East conflict, now back to the back to the previous levels, around 35 euros megawatt per megawatt. And basically, depending on how we kept increasing and refilling the storage, we will see how much pressure we are putting on gas prices. CO2 prices, really no news. They are more or less where they were. And electricity market prices, we have seen how we are no longer in those spring prices where the capture rates for the PV energy were very low. Now we are more in a summer price regime where prices in general are higher, and also they are higher, the capture prices for PV. At the long term, basically, what we are seeing now, or what we are expecting now, is an important increase, a very rapid increase on energy storage, mainly on batteries, and that will be one of the key drivers in the European markets in the coming years. And at the much longer term, then we will have most of the energy being renewable. Also, storage capacity is going to be very important in order to make them to take most of this renewable energy production. Also, the increase in demand due to the new electric vehicles, data centers, hydrogen production, and how all this will have an impact on market prices. Okay, this is the first part of the webinar. Now, let's talk a little bit about energy storage, because as I mentioned, we see them playing a very important role, increasing capacity rapidly in the coming years. And just to make an update on the situation in Spain, if we look at the grid access capacity right now for batteries, so right now the grid access capacity for batteries is just 7 megawatts. It's quite slow. Yeah, it's quite small. Yeah. If we look at how many gigawatts have the access already granted, it's more than 8 gigawatts. So it's basically multiplying by 1,000 what we have right now. Pending pending access, we have more than 16 gigawatts. So basically, if we sum everything up, we obtain more than 24 gigawatts. Remember, so this is the access for grid access capacity for batteries. Hybrid power plants, this can be combining several technologies. One of the technologies that they can combine is energy storage. And right now we have 16 gigawatts of grid access for hybrid plants. And if we add up the ones that have access already granted and the ones that are pending, we sum up close to 84 gigawatts more. This is grid access capacity. If we look at the installed capacity, so how much power is installed, right now we have 23 megawatts of batteries. With access granted, we have 14 gigawatts, pending 17 gigawatts, and if we sum up everything, we obtain 31 gigawatts of batteries. Remember that the goal, the energy storage goal for batteries in the PNIEC for 2030, it's 9 gigawatts, 9.4, 9.5 gigawatts of batteries. If we just putting in place the ones that have the access already granted, it will be 14 gigawatts. So nearly doubling the goal for 2030. Obviously, most probably not all of these 14 gigawatts will end up connected to the grid, but it's just a clear sign on how rapid we expect battery energy storage to increase. Batteries can be quite new in Spain and in most of the European countries, but we have markets like the market in the UK, the market in Germany, where batteries are already present and playing a role in the demand, in the demand supply and in the market prices. But the market in California is the one with where batteries are more clearly participating and having an impact. And you can see how how they the large gap that they fill uh, in the Californian electricity market. So basically, they charge during the production of solar power that basically give much lower prices, and then they provide this energy during the night peak. And this is the profile, the demand profile of basically most of the electricity markets in the world. Also, it's the typical profile of uh, could be a household, could be a small business. So basically, they can play a role at the market level, at the grid level, but also batteries are going to play an important role in behind the meter facilities, being with PV installations, for instance, with rooftop PV installations. So they are going to play a role from the consumer side and also from the producer side. So we expect them to be basically everywhere in the electricity grid, in the electricity markets in the coming years. Is there really an opportunity for batteries? Because we can think, or we can, yeah, we can think that they are needed because we need to make, if we want to be 100% renewable, then we need them able to take most of the renewable energy production, that it's intermittent, that it is mainly during solar hours. But do they have a market opportunity? Well, looking at the price arbitrage opportunities for batteries, those are the average intraday spreads of 1 hour, 2 hours, and 4 hours for the Spanish electricity markets. And this is basically related with volatility. And we see how in recent years, so basically since the end of 2021, there is a clear opportunity for price arbitrage to take advantage with batteries. Price spreads that go from 60 to more than 100 for a 4 hours batteries. And this is for the Spanish market, but French market, German market, both have also a lot of price arbitrage opportunities. And look at the scale. So for Spain, we were talking about a maximum of 130 euros megawatt, but for these markets, 150 is the usual. With peaks with more than 300, it was quite special because it was during the price crisis. But we can see how in these last years, the volatility, it's been quite constant, quite stable. So and we see them being in that ranges for the coming years. So there is opportunities there is market opportunities for batteries, and this is only one of the revenue streams, price arbitrage. Then you can use them for the ancillary services. It's going to be also an important revenue stream, mainly in the first years, because then if the capacity increases as expected, it's going to be some price cannibalization. But for the first years, the participation in the ancillary services is going to be a quite profitable revenue stream. And just to mention it, because we are mostly in the deadline, there's been the last IDAE call for aid for energy storage. They are from European funds for regional development. And just to emphasize it, we are talking about 700 million euros in fundings. This is more than the total of all the previous calls for battery developments. All the ones that we have until now combined, this is more than what we had. So it's a huge bet on energy storage. The deadline is next week, so probably if you are going to participate, you are already knowing it. But just to see how we are seeing the opportunity in the market. We are seeing their need in order to be able to manage all the renewable energy storage. But we are also seeing support from the governments and from and from the regulation. So this is a clear sign that it's the time for energy batteries and the rapid development that we are going to see in the coming years. And well, basically, our Alea storage division, we can provide, as I said, services for batteries combined with our services from Alea Blue, the short-term forecasting. We can provide best optimizations for the operation on the day-to-day operation. And combined with our long-term services, we can provide revenue forecasting. So we can forecast the revenues from price arbitrage, just the opportunities that we see, and from the revenues from the ancillary service, and also capacity markets in the countries where there are capacity markets in place. We can, as I said, provide long-term revenue forecasting from several sources. We also provide CapEx, OpEx estimation. We can provide several financial models on several details, and we can basically provide this for any European market, plus all the other markets that we are covering at the global level. And basically, that's what I wanted to say. Let me invite you to our next webinar. It's going to be in September. We are taking holidays on August, and we will be talking. We'll be taking a look at the energy markets in the last 2 months. There will be 2 months to review, and then we will be talking again about the storage, self-consumption, and the services that we can provide in this case to the retail companies. Okay, so that's it. Now we have a few minutes. So if there are any questions, we will be able to answer them. So let me see, Francisco, if you want, you can put back the poster of the webinar, and let me see if I find the Q&A question. Here, Q&A. Okay, I see several questions. Okay, about negative prices. How many hours of negative prices are you suggesting for this year, next year? So this year, for what we are seeing, we are most half of the year on. So basically, we can, as we have shown for Spain, we are seeing more or less the same number of hours that we saw last year. I already showed the prices for this year and for previous year, and the situation was quite similar. So we are seeing a quite similar situation. It's going to depend on how the prices are on during the autumn, but basically we are seeing a very similar number of hours. France and Germany are so far increasing the number of negative hours compared to last year. So probably in those markets, we will be having more hours with negative prices, probably even overpassing Spain in the number of hours. So around 10% of the hours, around 800 hours, is something that we are seeing for this year for most of the countries, or at least Spain, Germany, and France. For the coming years, it will depend. It depends a lot on the weather conditions, but probably next year, if the situation is more or less the same, we are going to see something similar in terms of negative prices. But as we expect demand to start increasing more rapidly, and also the energy storage capacity, these two are going to be the two key factors. So basically, how much we increase the demand, how much we increase the energy storage capacity, and how the solar and wind energies are still increasing. So depending on how these evolve, we will have more or less number of hours with negative prices in the coming years. So at some point at the long term, we see those number of hours being reduced. We see negative prices basically in all the horizon at the long term, but they are not going to be as persistent as they have been this year and last year. So some uncertainty on the next years that could be like this year, it can be slightly worse, they can be slightly better, but at some point we start see this number of hours reducing and keeping some negative hours at the long term. Okay, let's see if I have time for another question. Let me see. Okay, more questions about the negative prices. Okay, about the heat wave. A few days ago, the heat wave caused nuclear power plants in France and Switzerland to shut down, and prices exceeded 500 euros megawatt hours in some European markets. What is the outlook for the rest of the summer? Okay, now it looks like temperatures are slightly more comfortable, but yes, this is a problem that we more or less expected. So with very high temperatures, you will have problems in cooling some power plants. Nuclear power plants have problems cooling if the temperatures are too high. Gas power plants also can have cooling problems. And also solar PV panels also reduce a lot the efficiency with very high temperatures. So all of these factors are factors implying a reduction on the production. So if with high temperature we have higher demand, we can also have much higher energy production. So that's what triggers these price spikes. So if we have another heat wave during this summer, a similar situations can be expected. So there's an upside risk that this can for sure happen again during this summer. It will depend basically on the weather conditions. Okay, so basically we are already out of time. So thank you very much for being here. Invite you, as I mentioned, to our next webinar. Francisco, if you can show, here it is. So now next, so this is the one in Spanish. The one in English is also going to be in the September the 18th, and we are going to talk about again reviewing the energy markets, talking about energy storage because right now it's the hot topic in the energy sector. Talking also about self-consumption and the services that we can provide to retailer companies. So that's all from our side. So thank you very much for being here and see you in a couple of months. Goodbye.